All right. We are connected for the Friday edition of the news update. And as always, looking forward to connecting and sharing my 2 cents on a variety of subject matter. And it looks like we have some price predictions or some math calculations that just seem so absurd and so preposterous that I thought I wanted to talk about it. Because if these gold figures that we're getting from a credible source appear to be so large, imagine if we get a somewhat reasonable gold to silver ratio, then what would a silver price of silver be? That's what we're going to talk about. But before I move forward, as always, for those who are plugged in, if you have not as of yet, let me know where you're watching from. Feel free to check in. Leave a thought, idea, suggestion in the comment section or in the chat. I definitely would love to find out, I guess, what you're keeping your eyes on, and we're going to make the most of this as we move forward. So let me keep plugging along as I move, and we will make it work. And I need to make sure that I'm streaming on all cylinders here. And let me know if the audios and videos is coming in good, and we can make it work. But before I move forward, if you have not, I got to encourage and remind you, hit that like, check mark, thumb, subscribe, bell notification, check mark, so that you will stay plugged in and be able to connect with me when I go live or when I decide to put out a video. Okay, so where are we going to start today? Let's start with the weather. It is 24 degrees in Metro Detroit, and boy, it is chilly outside. I must admit, it feels mighty, mighty, mighty chilly. But then again, it's winter. What do I expect? But let me know where you're watching from. Check in with the weather where you're at. Definitely, it's always good to know that someone's out there enjoying the sun and maybe some water and some sand in their toes, but someday soon. But in the meantime, we got what I call a double whammy with the metals. It's comical at this moment because nobody believes the spot price given to us. Because as always, when you go to check out somewhere, if you can find what you're looking for, you're going to pay a price for it, plus the premium. And literally, what really has me the most excited about where things are heading is the fact that it's only the 16th day of the new year. So we're only 16 days into 2026, and there's already more than enough stuff to be excited about in reference to opportunities. And one in particular that I'm going to talk about is the mining space and the fact that we got a variety of metals and rare earths that are set to explode in price, but yet the miners that bring them out the ground are not experiencing the same level of price activity. So that is something to pay attention to as well. So, okay, so let's just jump right into it. Let me give you some stats, some facts, some charts and everything else, and then we will make our way around to get to the primary subject matter, and it has everything to do with some math calculations that I think should interest you. Okay, first and foremost, let's just check in and look at the metals as we get my page refreshed here. So this is what we're looking at. As I mentioned, the double whammy. This is the double whammy I'm referring to when it comes to silver. We had the drawdown from looks like 90, 30, 90, 40 down to 87, 83, recovered back to $89, and then it dropped down to 87, and now it's back to 87, 88.01-ish, whatever. And so here we are now, 88.37. And of course, just look at gold. Like, they did gold wrong. They did gold wrong. They just said, hey, we're going to just drop you from 46.15 down to 4,500. That's a nice little drop all within a trading session. Where's the government when you need them, when you see this type of activity? Nowhere to be found, as expected. Okay, so I'm going to jump into some headlines real quick. So in no particular order, I came across this and I thought it was worth bringing to your attention because never ask what your country can do for you, but ask what they're doing to your country. And that's from Michael Velli, my alias. But it says here, the new mayor of Davos says Larry Fink, BlackRock's chief executive, led an effort to elevate the World Economic Forum next week. So literally, we're going to have Mr. Larry Fink stepping in Klaus Schwab's shoes, Mr. Great Reset himself, next week for the first without Klaus Schwab. So here we have Larry Fink. So once again, for anybody who's been paying attention, you realize what's happening behind the scenes. You know what they're trying to accomplish with all this reset, the Great Reset, the Fourth Industrial Revolution. He's literally picking up where Klaus left off at. And you don't take over that prestigious position unless you also plan on taking it up a notch. And what I mean by taking it up a notch, ultimately the public-private partnerships, the merger of big tech with governments working together to build out a total tech technologically advanced surveillance state is what it's going to boil down to. So once again, it's going to be very interesting. But for those that care, for those that realize that nothing's changed regardless of who's in office, we're still moving forward. And then you have a comment that was given to us by a certain prime minister, which I have to play because it's all relevant. But it's just some details here talking about the event next week, who all is coming. And one thing I saw here that they're not necessarily forcing, but they're really encouraging all the big players to show up. So let me give you an idea. It says here, just some of the little lists here. It says, for months, the big question was whether President Trump would attend. He is coming. No doubt, because Larry Fink and Donald Trump, I think Larry Fink, Donald Trump has his financial dealings through Larry Fink, and he was his advisor during his first term. So it's good to say they working hand in hand. But it says here, he is coming, and many accounts, it was Fink who helped close the deal. It says, the relevance of Davos has been questioned in recent years, but Trump's presence guarantees that the world's attention will be focused on the event. It says Fink's contacts have been equally equivalent, effective in tapping Silicon Valley. One of the most notable figures is yesterday's Jae-Sung Han of NVIDIA. Hong has never before attended Davos, so NVIDIA CEO guy's never been there, but the founder of the AI chipmaker is arguably the most important CEO in the world right now, no doubt. The number one, first biggest company. And Fink plans to conduct the keynote interview with Hong himself. Fink also persuaded Ken Griffin, the founder of hedge fund Citadel, and whatever. So this a couple other people says, what I found funny is this says, while many corporate leaders previously competed to not spend time at the event's opening panels, favoring private meetings, Fink and Company pushed a number of them to appear on public stage. Jamie Dimon, you got the NVIDIA, Microsoft CEO, and all these world leaders, all these unelected officials are going to be there. So once again, you ask yourself, what are they talking about? Obviously, they're trying to maneuver and to guide this reset that's underway right now. And the president is going to be there. So, okay, yeah, sure. But what else we got here? Trump stuns by floating tariffs on countries that stand in the way of Greenland. So basically, if you don't play ball, we're going to tax you. So I thought about this. The idea that imposing tariffs on countries that stand in your way from achieving your objective is definitely bad politics. But then again, politics is irrelevant now. It's all public theater. But you have a president that's capturing nations, and you have him using a weapon of economic destruction, which is tariffs. So between capturing nations and taxing nations, those are the two tools that this administration is hard-pressed to push forward. And so would you be surprised if more nations decide to de-dollarize and to move away from this type of treatment on the international stage? That's just, my 2 cents there, but, we'll keep it moving. On another note here, Trump to push for emergency electricity auction underlined the difficult politics of rising utility prices and AI. So ultimately, trying to make the big players pay to play. If you're going to take over the world with AI, you got to pay for it yourself. But at the end of the day, the government's going to pay for it. Believe me, the big tech will not pay for it. So the White House is reportedly set to announce a new action today that will attempt to make big tech companies pay their own way, as President Trump put earlier this week, when it comes to energy consumption in the years ahead. The report plans for a new emergency wholesale electricity auction that would seek to lock large tech companies to long-term energy contracts in order to fund AI-fueled demand on power grids. So once again, these big tech centers that's needed to build out this surveillance state, the government's going to pay for it. We all know that. So this is just tough talk. Okay, sure. Keeping it moving. Here is something I want to touch on before we get to the main subject matter. This is important because it plays into more of what Larry Fink is doing, and everybody's working together. Canada agrees to cut tariff on Chinese EVs in return for lower tariffs on Canadian farm products. So here's a big slap in the face to the U.S. because if Canada opens up their EVs to China, which they will, you got BYD, the EV company on top of all the other ones, because Chinese EVs are superior to Tesla and Rivian and everything else done here. There's 2 or 3 primary and then the big 3. Big 3 is getting out. As I posted an article, you got the Hamtramck facility, EV facility for one of the big three, laid off 1,100 last week, and they're cutting off the EV because it's not efficient. It's not efficient, and it's not cost effective. And so you fill that gap with China. So now we're going to have Chinese cars coming through Canada, and you better believe you're going to have a lot of people going to Canada and the U.S. buying Canadian cars, electric vehicles, because they're way cheaper, and bringing them to the U.S. So that's going to be a problem that we're going to have to deal with. So shouldn't be too surprising. And then on another note, this is a side note, but I thought it was important. Let me share with you a statement. I'm going to play a statement that was given by Prime Minister Carney, and I want you to listen to this and let me know what you think. Let me make sure my volume's up so I can hear what's going on here. But take a listen.
I believe the progress that we have made in the partnership sets us up well for the new world order.
So there you have current Prime Minister of Canada talking about the new world order. So once again, I take that as him reaffirming that things are set, things are moving forward, and they're no longer going to resist China's role in this multipolar world order that the BRICS are apparently working on. And by Carney bowing down to Xi and opening up his borders, lessening the tariffs, trying to buddy up with China, because once again, Canada can't make it without partners, because ultimately they produce very little of substance outside their natural resources. But they're literally going to open up to China, and it will give China more access to resources, I'm sure. So this is going to be a problem, because the U.S. is definitely, Trump, by next week, going to be finding some way to tariff Canada even more. So you know how it's go. But to the subject matter of the hour, this is what you came for, I'm assuming. Let me get into this. I'm going to just start off by sharing with you something that caught my attention. It has to do with price. Let me see. I'm trying to figure this. Price projections. Okay, so here, let's just jump right into it. So here's this is what caught my attention here. This is from Mark. Mark is, I don't know anything about Mark, just caught 23,000 followers, but it's just the subject matter in general, because the heading is what caught my attention. If the dollar falls, gold could hit 39,000. VanEck's emerging markets bond team ran the numbers. Their framework is simple. Divide central bank money liabilities by gold reserves. Their results are staggering. And so let's get into some figures here, because if this is what these professional, they have to be very extremely competent to work for VanEck and to give out these type of price models, but it's just the prices that seem absurd. But it says here, the headline targets U.S. narrow money weighted by FX turnover puts gold at $39,000. It says using the M2, which is broad money weighted by the FX turnover, $184,000 and 21 cent, or not 21 cent, but $184,211. Okay. And so I'm thinking like, okay, so here we have some individuals putting together some figures to give to the public, and for their customers that, use their services, you send out something like this, or this word gets out. How can this not be something bullish for gold, as far as people wanting to have a higher allocation to this metal in their portfolio or in their physical possession or whatever? And it's like, why would they give out these figures unless like gold was a part of somebody's plan or somebody's strategy? Because you don't just give out these type of figures because it's obvious if the dollar was to falter completely or no longer be the reserve currency, and if gold was to be revalued in all fiat currencies, basically, to have $184,000 gold would be crazy. Then it goes on to give more. And this is the article right here, so I encourage you to go check it out. But this is from VanEck.com. Came out January 7th. And it's a 10-minute read, quite lengthy, but it gives some charts, graphs, stats, and stuff like that, so I can just thumb through that real quick. But ultimately, the gist of it is what I just mentioned, and I'll give you some more from that. But talks about central bank purchases surge after sanctions. And so literally the turning point, according to their chart here, is right here behind me, where in 2022, we saw a surge in gold accumulation by nation states, especially those that were sanctioned. Then it goes on and talks the definition of money keeps expanding due to runs. And so you got M0, M1, M2, M3. And you got a price figure of $184,000 in a time where QE is not really running rampant yet. We're just still dealing with the side effects from the previous monetary stimulus from 2020. And so here it says, as Central Michigan, Central Bank MO divided by gold reserves is 39,000, and that's as of right now. If you were to count all the M0 created by central banks. And then it gives you some charts here, price and gold, equivalent, whatever goes on. And then it says gold, M2 gold reserve equals 184,000 per ounce. And then it gives you some explanations why and how, and it shows a chart here where gold M2 spiked after the great financial crisis and lockdown. So going back, here we have the true weight of gold, the true price of gold if you were to account for it in the total M2. And so that got me to thinking, okay, if we're getting these, these astronomically large figures for gold, then what would that be in silver? And so just to throw out some things here, let's just play with this and see what we would get. And so what I wanted to do was just open up ChatGPT and just throw out some figures and see what we can get, just for fun. And so let me go here, and just for fun, I want to throw out some figures and we will see what we can do here. So I'm going to bring this up here, ChatGPT. We're going to have some fun with it. So I'm just going to ask if gold reaches 184,000 and the gold to silver ratio is, just say 8 to 1. What? Man, I keep hitting the wrong button. What would be the price of silver at that time? And let's just have some fun. Let's see what we get here. Let's just see what we get here. That's a straightforward ratio calculation. It says, if gold is 184,000 per ounce and the gold to silver ratio is 8 to 1, then silver would be $23,000. Silver will be $23,000 per ounce. That kind of price implies an extreme monetary scenario, but mathematically, that's correct outcome given those assumptions. So imagine silver at $23,000. And the reason I use 8 to 1 is from this particular graphic right here. This is from U.S. Debt Clock, talking about silver reset. And silver to gold is mined at 8 to 1. So if we were to get back somewhere like that, $23,000 silver would be something to consider. And you got to realize in a world like that, where gold would be the global monetary medium, then there'll be layers built on top of it, whether it be digital, tokenized this, or whatever. CBDCs is going to be on there, stable coins, going to be all types of things going to be on there. But yeah, of course, every country will still have their own national currency. It'll just be a digital, solely digital, because paper at that point would just not be something that people would even really want to use. So could you imagine trying to sell an ounce of silver to go down to your coin shop and just plop one coin down and say, hey, give me, let me cash this out. You'd be like, okay, how you want this? 20s, 50s, 100s? Or we're going to have to just wire it to you. But then again, it's just stuff to think about, just for fun, laugh and giggles. But once again, this is all because of VanEck. The fact that they are out here giving these preposterous valuations. So literally, here's the individuals: Eric Fine, Natalia Gershina, and David Osterwell. These are the three people that work together to put together this paper. And it just basically just asks the question: what if gold replaced the U.S. dollar as a reserve standard? In this, if this paper, our emerging market bond team values gold by matching central bank liabilities to gold reserves, implies 39,000 to 184,000. So once again, I'm just trying to pass on the message for whatever that's worth. But as always, before we move forward, let's just talk about something. Sick of watching your savings lose value? Now's the time to get your weight up. Visit the RTD Silver Team Store and either start stacking silver or add to your current silver stack. Because by getting the people's money, you're protecting tomorrow by stacking today. Click the link in the description to find out more information. Looking for ways to get affordable gold? Then it might be time to redeem your Federal Reserve notes to spendable 24-karat gold notes. It's real value you can control, and it's a great way to protect yourself against inflation. To get yourself some, go to buygoldnotes.com or click the link in the description. And last, if you're looking for alternative banking, look no further than UPMA Precious Metals. As you know, banks aren't protecting your money. They're actually using your deposits to extend loans, which expands the monetary base and offer you pennies and interest. Get back to traditional banking by opening up a free UPMA Metals account where you actually get to save in physical gold and silver in a vault with your name on it. To find out more, go to bit./gold silver banking or click the link in the description for more information. Back to our show. Okay, so let's get into some other things. I have lots of things bookmarked here, and I want to get through it as fast and as efficient as I can. Okay, so let's just jump on it. So I'm in no particular order. Here's some things worth paying attention to that I bookmarked that we will definitely probably find more about later on in next week. So here we got Shanghai Exchange lowers trade limits for silver and nickel's futures. And so this is something that was shared 4 hours ago, give or take, and it's from Bloomberg. Shanghai Futures Exchange lowered the maximum number of intraday positions for silver futures to 3,000 lots, according to an exchange, down from 7,000 to 3,000. And so one of the people asked a question, what does this mean? And basically it says here, Shanghai Futures is reducing max intraday opening positions for silver futures from 7 to 3 lots starting January 20th to curb speculation and high-frequency trading amid recent volatility. It says this could dampen short-term price swings, potentially pressuring silver prices downward as it limits aggressive buying. However, China's ongoing silver exports restrictions may support higher prices long-term if the global demand persists. And so that's just something there that, once again, between the increase in margins by all of these exchanges and things of the nature, trying to shake out weak hands, stabilize things. Now you have apparently Shanghai Futures looking to shuffle their basket of lots, which obviously probably is, contracts, deliverable contracts, and make them smaller to once again disincentivize institutions and the like from being forced to take out such large hedges with these 7,000 by reducing it to 3, hopefully to stabilize things and try to get some type of footing, I guess. That will be my guess. But once again, we will find out as time moves forward. But let me give you some more things worth paying attention to that I think is worth your time. So here is something from James Anderson that will be interesting to keep a hold of. Apparently in 2024, the IRS finally updated 1099-B, the bullion dealer reporting requirement. So here we have something that coin shops, anybody that sells or exchanges or engages metals will probably be forced to fill out extra paperwork. And so the question is when and how much. But it says forms only submitted if and when investors sell in the size to bullion dealers in sizes now in line with modern COMEX and futures contract delivery amounts. So literally what's here is contract size of gold 100 ounces, silver 5,000 troy ounces, platinum 50 troy ounces, and palladium 100 ounces. So according to just this excerpt here, it looks like bullion dealers probably will be forced to do some reporting. And according to the 2024 standard, it was based on the weight, size of weight that the futures and the exchanges deal with, not the actual retail buyers, meaning smaller amounts. So my thought would be by 2025, 2026, 26, 27, there'll be a new form, an updated form, where they're going to want to know from all coin shops, dealers online, everything of the like, what type of weight is moving, especially if we get silver at $300 an ounce, gold at 6,000-7,000 an ounce, and there's a lot of activity. And the reason is they're talking about money laundering. And so just to click on this and give you an idea of what's going on here, I'll just read it because it's always meant to protect. I don't know who's meant to protect, to be honest with you, but it's so that money doesn't move without them seeing it. It says, in order to stay compliant with IRS requirements, the second paragraph says, precious metal dealers must report certain transactions of specific precious metals bullion. The goal of this requirement is to limit money laundering, transactions from going unnoticed. And this is from John Davison a while ago. So once again, just something to pay attention to. There will be no reset and no profiting without the man getting his. You know how it goes. Okay, on another note, I'll just breeze this briefly, but Amazon, the second company to actually take shares in a publicly traded company, i.e. a mining company, Amazon becomes first buyer of Arizona copper made by Rio Newtons. So Amazon's getting in on it. And then here's something that caught my attention yesterday from the discussion we had about the United States Mint, and how I said literally when I first got wind of it, went online, saw they still had, they were still selling silver, thought about buying some, didn't, because I'm like, man, I get it, they may not, whatever. Sure enough, here's something from Silver DGen. It says, U.S. Mint cancel order. It says, I received this from Anon Stacker, who placed the order 2 days ago. Today's order was canceled. So literally it shows a screenshot of how much he went to buy. And at the very bottom it says status, cancel. So to go from having your card swiped, processed, to then having it canceled, assuming it was processed. But to receive a notification saying that your order's canceled definitely would, I'm sure, piss you off, because you were probably excited to get your weight up, and all of a sudden now they took that privilege and that right away from you. So, and then last here, just some more silver talk here. This came across us yesterday, and this is from Jason M., who has 1,900 followers, and it just says here it's a screenshot, but it's something that's very bullish for silver. It says, Silver Squeeze Fox News. Imagine my surprise to hear the TV in the background talking about silver and the mother of all cup and handles patterns. I took a picture as fast as I could, so buy some silver. So literally, this is yesterday, somebody at the board talking about silver, and they just showing something. And if you can see how massive that next wick looks serious. But it says here, Sudmeyer's silver chart is showing the mother of all cup and handle patterns. And this was on Fox Business. So once again, the mainstream media can't hide it completely, but they won't promote it. But then again, they're not hiding it. So, but then again, this is just some things that's happening. Thought I would check in, share my 2 cents on it. And of course, the figures given to us by VanEck are extreme, probable, but see, we'll have to see at what point and what will life look like then. But, just think about that. If things were to correct ratio-wise, silver will put you in a very good situation. So if it was to go to 23,000 ounces of silver, imagine if you just had 10 of these. What would that do for you? In a world where everything is revalued, of course, but as far as having some liquidity and some capital to rebuild after the Great Reset, with whatever we have left of humanity, it will be something that could hopefully put you in a better position than you are today. So that's just my 2 cents. But anyway, if you guys like this, hit that thumbs up, subscribe, share, drop some comments, share this so people get alternative perspective, and I'll catch you guys later. Peace.